So let's start with the daily time frame here, as I think this is one of the easiest setup that I ever had to enter. As you can see, we had this wick through to the upside that took out these highs, and then the market impulsed with volume through to the downside, which indicates the presence of a financial bank, whatever you want to call them, people who are manipulating the market, who have a lot of money, whatever you want to call them. As we impulsed through to the downside, what did we actually do? We mitigated this order block. So we let more traders enter on this order block right here to gather their stop losses below this low right here. So we have liquidity through to the downside. So we cleared out liquidity through to the upside, and we formed liquidity through to the downside, which indicates that the market is more likely to be bearish than bullish. Let's go to the 4 hours time frame, for example, and look inside this mitigation right here. What do we find? We find these triple bottoms, quadruple bottoms, whatever you want to call them, right here, this huge support line. So a lot of traders are entering right here, 1 2 3 4 touches of this support line. A lot of traders are entering right here, placing their stop losses below there. We have this trend line through to the upside as well. As you can see, a lot of touches of this trend line, 1 2 3 4 5 touches of this trend line. On top of that, we have this order block right there, so a lot of stop losses down there. On top of that, we have this 3 drive pattern through to the upside, 1 2 3. So there's a lot of indication that the market is more likely to be bearish on this short term than to be bullish. We can see right there this daily liquidity grab through to the upside. We actually grabbed these highs, this double top right there and this high right there, and then we moved with volume through to the downside, formed liquidity right there. So market is more likely to be bearish. Now if I go to the 30 minutes time frame right there, what is happening? As we look at this 30 minutes time frame, as you can see, we had this like really ugly price action right here. However, if you want to look at its details, what happened is that we formed tops right there, and then we liquidated them. Then we liquidated also to the downside. So we did like a reset of the market right there. As you can see, the market is right now pushing in my direction. We'll have a look at it. And as you can see, as the market came back through to the downside, we also formed these bottoms right there. This support line, 1 2 3 4 5 6 touches of the support line, and then the market started pushing through to the upside, where I went to the 7 minutes time frame right here, and I saw all this liquidity through to the downside and decided to sell S&P 500. So I'll let you know about this trade, I'll let you know how it goes, and I'm going to be taking partial profits around this area right here, this double bottom. As you can see, I'm going to be taking partials right there and let the rest run. Let's see how this goes. So guys, as you can see here, the market impulsed directly into my direction and hit my TP area. I want to comment on something right here. Since the higher time frames are bearish, what you can do is you can close 80% of the position and then let the rest run, because as you can see on the 4 hours, for example, this is barely one candlestick through to the downside. This is only a part of one candlestick going down, so it's not like a big move to the downside. You can close 80% and let the rest run if you're like bearish on a daily 4 hours time frame and you just scalped the 7 minutes down. So that's the first comment that I want to make. The second comment that I want to make, guys, is this advice I always give it, which is try to trade the easy setups. You will look at gold, for example, and you'll see liquidity to the upside, liquidity to the downside, and the market is right here. And you'll start trying to be this genius who guesses like, okay, is the liquidity to the upside going to be grabbed first or the one through to the downside? And you'll start like writing these problems down and trying to optimize yourself, guessing in which direction the liquidity is going to be grabbed. Start with the easy setups. Start with the setups where the liquidity to the upside has been already flattened, it has already been cleared out, and there's a lot of liquidity flustered to the downside. And then you'll aim immediately to the downside, and this will be an easy trade for you. Start with those, make money on those, and then go look at those other setups. Once you build the experience of those, start looking at those setups and try like to form your own thesis, your own strategies. I have 8 years of experience in the market, and therefore I can look at those setups after 8 years and form my own thesis. However, when I first started, and as my students also now start, I always tell them, look at the easy setups now. Look at the ones that will make you money. Make money in this industry because this is your goal, and then like develop your skills and just increase your performance to those other setups, and try to like just be curious about the market and know where it's going. But for now, Okay, I received a phone call, but for now, as I was saying, just trade those easy setups and make money. Once you make the money and you have the time to sit down and improve your performance, improve your experience, look at the market as a whole and understand it and do all this stuff, then you like increase to other areas where like it's hard to guess where the market is going and you try to form your thesis and all that. For now, just make money. Look at those easy setups. Cleared out, liquidity to the downside, and try to trade those easy setups for now. And by the way, you can always trade just easy setups. I'm not saying that you have to trade those hard ones in the future. However, I know that as a trader, if you're really passionate about it like I am, you'll always try to look at those hard setups, try to understand the market from an understanding perspective, not just a trading perspective. So I know that you will do this eventually if you're passionate about the market. However, for now, start with this. And if you're not that passionate, if you really don't care about understanding, you can always just trade those easy setups and optimize them and always be profitable with them. So start there, guys. All right. Now, this will be the end of this video. If you'd like to contact me, the link of my Instagram will be in the description. If you'd like to ask me any questions, attend my Q&A sessions, do all of this. The link will be in the description, guys. Otherwise, good luck and I'll see you in the next video.